Hey there, it's Jim McMahan, president of Benchmark Mortgage here in Dallas. Just wanted to do an update, but just haven't reached out since a week and a half ago, and so much has changed in our world, but wanted to continue to let referral partners and just very important clients that you are, of Benchmark Mortgage, of just kind of what's going on in the industry from our perspective. With the radical changes that have happened in the month of March in our industry, we've seen a lot change, as many of you are already aware. The jumbo marketplace has shrunk quite a bit, with many of the mortgage banking entities like Redwood and others being illiquid for the time being because the Fed did not support or is buying or supporting the securities of that market. Most of the big banks are going to continue to do jumbo lending, but will do it from more of a portfolio standpoint, and we'll be doing it from their banking platform. Some mortgage bankers will still have access to a few outlets, but bottom line is that world has changed for at least the short term. We're, in my kind of viewpoint, we're back to where we were in 2009, 2010, where jumbo loans will be controlled by the big banks, some of the smaller private banks, and then the other big strategy that we're already seeing is customers saying the $700,000 price range, using a first lien of the maximum of $510,000, and then finding a second lien, which many of your good loan officers like ours at Benchmark can find or place for you. So right now it's creativity for sure at the max. It's creating certainty through truth and dealing with guidelines as they change. At Benchmark, we have made some really good decisions. We're continuing to just be strong. Actually had a record month in March and will in April too, just because volumes are insane. But the more important thing right now is we're able to help a lot of homeowners from not only a refinance standpoint, which obviously will help with working through the coming recession, but purchases are our priority. And so we're continuing to maximize that. You're probably hearing, if you haven't already, all major lenders and servicers and those that buy loans and invest in loans have shifted FICO scores to a minimum of 680 as the standard. That does not mean that there's not still a market for 620 to 680. The challenge will be you're going to have to be talking to somebody that can choose to service a loan and still meet very strict guidelines and standards for those 620 to 680 FICOs. We are one of those. We do service some of our own loans and have made a decision to continue to do that. It will just be really a very thorough underwriting process in looking at those loans. But the good news is we can look at and help that borrower, again, one at a time, but that's a good news story. And I think there'll be others that will do the same. There's many lenders that can't. The liquidity or illiquidity of the marketplace right now is a big deal. There's a ton of great articles out there right now that talk about this. CNBC.com is a great source. If you have not been able to read, I'll attempt to add a couple of articles to this today, if we can do that and send this out to you all. But we want to be a great light and beacon of hope and light on educating our referral partners on just what's going on from a day-to-day, week-to-week standpoint. Of course, the agency business, which is Fannie Mae, Freddie Mac, is very, very strong. The government, through the Treasury and the Fed, is standing very, very strong behind that market and has created almost over liquidity in the past couple of weeks, which that got worked out this past week. There was many articles and things on CNBC and other news networks that were talking about the margin calls in our industry, and some of that got worked out this past week. But anyway, a lot going on in our business. But bottom line, we are very, very focused on serving our clients. We are a relationship company. We're thankful for those relationships and for the business we're able to take in and close right now in this very unique time. A lot of people have asked us about FHA. Again, FHA has moved to, as a standard, 680 FICO scores. I see exceptions being made under that, especially for purchases. It's just going to have to be underwritten deal by deal, and then you're going to need to be with a lender like us that does have the capability of servicing that loan for at least a time, because the industry is so backed up on what I would call the backside of the business, where the liquidity comes from in buying and selling loans, is got to remain fluid. And to this point, and I think that will be strong going forward, the Fed has done a fantastic job in this administration in keeping liquidity in that honey hole of the marketplace, if you will, the $510,000 loan down to the smaller and even the $100,000 and $200,000 range, which many of us deal in that $200,000 to $300,000 range. is really, I'm going to call it safe. Guidelines have gotten stricter, of course, over the last few weeks. But again, that's one of the things at Benchmark, we are going to be more than ever committed to education to the buyer, helping that customer make sure that they're doing everything they can to keep their FICO score strong and qualify for these home loans. So challenging times, but opportunistic times for those of us who get it. And just wanted to give that update today. Thank you very much for the opportunity to serve you. And we'll look forward to updating you again soon.